Aloha again from Hawaii. You're listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 25th of September, 2017. We see in our charts for Friday, the S&P 500 down just a little bit, 0.02%. The Q's down just a little bit, 0.10%. TLT up 0.29%. And gold up 0.46%. So let's talk about what's going on the S&P 500. And forgive me, my friends, I announced that incorrectly. In fact, S&P 500 was up 0.02%, not down. We have the fourth week of up movement. Still don't have a weekly vertical crossover going up. If you look at what's happened over the course of the last week on the weekly chart, you can see that the high the prior week, ending the 15th of September, was 250.32. The high over the course of the last week, 250.19. So again, we're sliding sideways. Even though the derivative oscillator is losing downward momentum, we can see that the price percent oscillator is trying to cross over going up, or it's sliding sideways at this point, but throughout the week was trying to do that. Just not enough energy. What's happening with this market? Is it old and tired? Well, we'll see how things go. Don't forget, at the end of September, what happens? We go into the fall-winter trading zone, the summertime doldrums, where there's not a lot of volume in the market and things sort of just slide along haphazard. We're going to see what happens come October 1, what we see setting up. We're not forecasters, remember. We are trend followers, so we're waiting for good, strong trends to be set. As we look at the two-day chart on the S&P 500, we see that the two-day trend, as far as connecting the green up candles, we pulled below the latest one as we filled out and finished the latest two-day candle on the Friday the 22nd of September. And what we basically have is we had a two-day vertical crossover going up back on the 12th of September. Market went up for two-day candles and then has really slid sideways since then. As we delve into the 4-hour chart, what do we see? We can really see that where the market really peaked out there at about, 250.09 on the two-day candle, and has slid along sideways since then, tending down since we had the 4-hour crossover in the morning of Monday, starting in the morning of Monday, the 18th of September. So again, we'll just continue to watch this market. Has it topped out? Is all the energy gone? We don't know. We will not call any of that until, of course, we have confirmation that that has occurred. And at this point, it's going to be that two-day chart rotating over, going down. Hasn't happened yet. Will it happen? We don't know. When it does, we'll let you know, and we'll get ready to jump into a trade on the S&P 500 if that indeed does occur. If the market continues to move up, 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 and it rotates our weekly chart over, then of course we'll look for a trade on that. What do we see going on with the Qs? On the weekly chart, we see that the Qs, not as much strong up movement as the S&P 500. The Qs has been going down since weekly vertical crossover all the way back. Excuse me. All the way back on the week ending the 16th of September, the 16th of June. And of course dropped, picked up a little bit in mid-July, dropped again in August, and then started moving up the first 3 weeks in September, but we have a spinning top at the end of the current week on the 22nd. Still down, never has crossed over, even with the up price movement, never has been enough energy to cross either the derivative oscillator or the price percent oscillator. In fact, the price percent oscillator is tending down, not going sideways like the S&P 500. What do we see on the two-day chart? We see that again, it looks somewhat similar to what happened with the S&P. This happened on the 1st of September. Things topped out and has really been sliding sideways since then. What did we have happen? We have now had We talked about this. We can confirm that we have had a crossover going down on the 2-day chart on the Qs. So that means that now it is confirmed. We talked about that possibly happening yesterday in the podcast. It did happen. The derivative oscillators flipped over, and we have confirmed, because the candle's closed now, we'd already seen this starting to happen. We now have a confirmed 2-day vertical crossover going down. So what does that mean? Well, when we look at the 4-hour chart, we can see that it is now moving down. Our typical way to play this is we wait for a pullback. That means that there'll be a crossover going up on the 4-hour chart, and then we jump in when it crosses back over, going in the same direction as the 2-day and the weekly chart. If you listen to our How to Read a Stock Chart video, for those of you who aren't familiar exactly with what we're talking about, we explain that there. How do you get that? You subscribe to the Daily Market Review. And when you subscribe, we will send you a link to a lot of things. One of them is How to Read a Stock Chart video, and it will explain what we do, how we do it. Those of you who've been trading a while, practicing a while also, you can also look at the 2-hour chart if you want to have sometimes a jumping in point that's going to be sooner. The only problem with that is because it's a smaller chart, it might not be as accurate as a bigger chart. Remember, bigger charts, bigger money, and also typically longer and more accurate moves. All things being equal, the market always tends to move in what direction? The direction of the biggest chart. And for us, that's the weekly, except once a quarter, and we will go over the quarterly chart for all of you who have taken that training and are ready to jump into it. We'll go over that at the close of September. That's when our next chart, our next quarterly candle closes. Okay, let's keep moving through these charts. What do we see going on the weekly chart for TLT? Our second week of down movement on the 20-year bonds. Hasn't crossed over going down yet. Thought that could happen this week. Has not happened. Derivative oscillator still in the green. Price percent oscillator is still above the red signal line, so we don't call that yet. We had a great run up for those 5 weeks. Had a great trade in there. For those of you who did a practice trade there. Wonderful for virtual trading, wonderful for practicing on bonds. May have another one coming soon. We see that, of course, the 2-day chart has crossed over going down, and we'll just continue to monitor, see if that's enough to eventually pull the weekly chart over going down. What do we see on the 4-hour chart? Of course, it crossed over at the end of the day on Friday going up. So that's interesting. Now that we have the 4-hour chart going up, is the down movement in TLT done? We don't know. It's just the 4-hour chart. We've got to see the daily cross back over going up. It did stop the down movement. It did break a strong trend line, but, well, it didn't break a strong trend line because it hasn't closed above that trend line, but we did finish with a green up candle on the latest 2-day candle, a green spinning top, which means what? As far as our Heikin-Ashi candlesticks goes, it means indecision. So we'll continue to watch. And again, when that weekly vertical crossover occurs or that 2-day chart starts moving up, we might have a potential trade. Okay, and we told you what was going with that 4-hour chart. It's crossed over going up. Okay, back to the weekly chart for our last ETF, Exchange Traded Fund for the week. That is GLD. What's that? Everybody's favorite metal, gold. Gold. What a beautiful trade we had in gold. We have seen gold move up. We had a weekly vertical crossover on gold all the way back on the 11th of August. We had a great jumping in point somewhere around 123 or so. And of course, gold ran up to a high of 128.32. Last 2 weeks, particularly the past week, going down strong on the weekly chart. Still not crossed over going down. What did cross over? Well, we saw back on the 2-day candle ending on the 20th of September, we saw it rotate over going down at that point, and big acceleration down on the derivative oscillator and on the price percent oscillator. And of course, we look at that chart that we can trade just alone on it most of the time on gold, one of the few charts that seems to work time and time and time again. It rotated over going down back on the 11th of September. If you would have jumped in after that candle closed at the opening of the next candle, you would have jumped in somewhere around 127. And of course, gold has gone as far down as 122.49. That is a nice down. And those of you who aren't familiar with what we're talking about, when we talk about why would you buy gold and want it to go down? Well, there is an inverse gold fund. Problem with that is, of course, the bid and the ask are very far apart, which means it's quite illiquid. However, those of you who know what options are about, put options on gold would have been beautiful. And again, practice all of these things. Folks, that's where we are as we end the week. We have been having a great time here in Maui. We'll be heading back Sunday night. So we look forward to getting back to the East Coast of the United States, continuing to provide you with all of our training, market reviews, all that we do here at chartingwealth.com. God bless you all. Mahalo from Maui. All the best, my friends. Let us hear from you, cw@chartingwealth.com. And again, if you've not subscribed to the daily market reviews, which includes this weekly market review, you need to do so. It's easy to do. Go to chartingwealth.com. Put in your first name and your email address, and you'll get all the goodies for free. God bless. All the best from the whole team at chartingwealth.com.